The Q3 FY25 result season has come to an end. This result season was overshadowed by a falling market that captured investors' attention. Between January 15, 2025 and February 15, 2025, the BSE 500 fell by over 1400 points. In today's video, we will discuss some trends from Q3 results that can affect the market in the coming months. Markets tend to move in line with companies' performance on sales, profits and margins. So we will analyze those to see where the markets are headed. We will also discuss the sectors and stocks you can keep on your radar. All these makes this video indispensable for serious investors. Hello and welcome to ET Money's YouTube channel. We have also published a video on some of Q3's blockbuster returns. I've included the link in the description so you can watch it later. Alright, let's begin with the first major trend. Let's consider the BSE 500 group of companies to check the revenue growth performance of listed companies in Q3. The BSE 500 has companies of all market sizes, large, mid and small, and hence is quite representative of the Indian market. In Q3, aggregate sales growth was 4.4% year-on-year, the lowest in the last 5 quarters. The sales growth has been trending down since Q4 of FY24 when it was 8.4%. Now, if we go back a bit, it appears that the sales growth recovery, which started in Q3 of FY24, has hit a roadblock. The sales growth had hit a low of 4% in Q2 FY24 after continuously falling from 17.7% in Q3 FY23. Also, if we compare the 9-month performance of FY25 with that of FY24, the sales growth for FY25 is slightly lower. Over the last 5 9-month periods across financial years, sales growth hit a high of 32% in FY23 and has fallen since then. Now, the fall of 7% in sales growth in FY21 was due to the COVID-19 shock, which was smartly reversed the next year. Alright, let's move to the next trend now. So the sales growth trend isn't very encouraging. But what about the profit growth? Well, after turning flat in Q2, the profit growth rebounded in Q3 and registered an 18% rise. It hit a high of 45.6% in Q1 FY24, and since then it has been falling quarter after quarter. So the rise in Q3 may be welcoming. However, if we check the 9-month results, the green shoots in Q3 have yet to make their impact. The latest 9-month profit growth of 7.1% is the lowest in the last 5 financial years. Now, a look at the change in operating margins can tell us if the rise in profit growth in Q3 is due to business performance or not. The average operating margin has fallen from 32% in Q3 FY24 to 29% in Q3 FY25. This suggests that the rise in profit growth in Q3 is not due to business performance. A fall in interest cost, taxation, depreciation, or all of these could have been the reason behind the higher profit growth in Q3. Again, there is no exciting news on the profit front either. This reflects pain points in business performance. But which market segment is most impacted by it? Let's see it in the next section. Let's start with large caps. The revenue of large cap companies grew by 6.5% year-on-year in Q3. That's better than the growth in the previous quarter, but still the second lowest in the last 6 quarters. The profit growth jumped to 14.8% from 1.4%, but it is still yet to reach the levels 3 quarters back. Let's also check the operating margins. The margins have reversed their trend of degrowth in the last 2 quarters and expanded by 30 basis points in this quarter. That's a positive. Next, let's take a look at the mid caps. Now, the revenues of mid-cap companies grew by 9% year-on-year in Q3. That's lower than the last 2 quarters, but it's still a decent number given the recent history. The profit growth jumped by a good 36%, thus exceeding the levels of Q3 FY24. Now, look at the operating margin reveals that while the margin contraction has reversed, the margins are at the same level as they were a year ago. So, the net change is 0. Now, this suggests that the jump in profits is not due to core business performance, but likely due to reduction in interest costs, depreciation outgo, taxation, or all of these. Now, small caps present an interesting picture. At -8%, their revenue growth has slipped into the negative territory in Q3. That's their worst showing in all quarters taken under consideration. However, their profit growth has bounced back from a negative 16% to 11% in quarter 3. But this profit growth is not accompanied by a margin increase. The margins have actually decreased by over 600 basis points, which is the biggest fall in the quarters considered. Overall, the small caps have the poorest showing in quarter 3, and this could make the ongoing fall even worse. So, of the 3 market segments, large caps have done the best, but none large, mid or small caps are anywhere near their performance metrics a few quarters ago. Next, let's take a look at the sectoral trends post quarter 3. But before that, if you're finding this video useful, do subscribe to this channel and don't forget to press the bell icon so you never miss a video from us. We analyzed 12 key sectors and observed their revenue growth, profit growth, and change in average operating margins for the last 4 quarters. The sectors that have been doing well include capital goods, consumer durables, healthcare, realty, and telecom. All these sectors have been reporting healthy revenue and profit growth, and their average operating margins have also been mostly expanding. The star in this pack is the capital goods sector. Its revenues and profit growth has been in double digits in the last 4 quarters. Plus, its operating margin has also expanded across all the 4 quarters. The consumer durable sector has been posting high double-digit revenue growth. Its profit growth has been respectable too. The healthcare sector has been delivering revenue growth in lower double digits, but its profit growth has been quite robust, aided by higher margins in 3 of the last 4 quarters. Now, the realty sector has been growing revenue and profit well, but margins have shrunk in the past 2 quarters. The telecom sector has been riding high on back of high profit growth and margin expansion. The sectors that have done poorly include oil and gas and power. The oil and gas sector has reported meager revenue growth over the past 4 quarters. Its profits have shrunk year on year in all 4 quarters, and its margins have been down in 3 of the last 4 quarters. The power sector has done comparatively better. However, its profit has shrunk in 3 of the last 4 quarters, and its margins have shrunk in 2 of the last 4 quarters. Next, let's look at some stocks that have been doing well over the last 4 quarters. Getting the sectoral perspective is good from a broad perspective. However, not all companies within a sector do well together and vice versa. Plus, sectoral trends can be dominated by a couple of big companies in the sector. For instance, consider the telecom sector, which has been among the best performing sectors. Bharti Airtel alone contributed about 64% of total sector revenue in quarter 3. Its profit share was even bigger at about 80%. So the picture of the telecom sector is determined by just one company. That's why it is important to check the stock level trends. Now, within the BSE 500 group of companies, 54 companies have excelled in each of the last 4 quarters. That means their revenues, profits, and margins have all improved. Now, when we filtered out companies whose revenues and profits grew by at least 10% year on year in each of the last quarters, only 25 companies remained on the list. The bigger names in the list include Apollo Hospitals, Bharat Electronics, Divi's Labs, ICICI Lombard, Lupin, TVS Motor, Varun Beverages, and Zydus Life Sciences. These 25 companies enjoy positive earnings momentum, so they can be worthy contenders for your portfolio. However, research them thoroughly before investing in them. Now, to get all the financial numbers for a listed company, just head over to the ET Money website or app. Here, you can type the company name in the search bar and access a host of information on it, including the balance sheet, income statement, cash flow statement, and financial ratios. What's more, you can also find details on the shareholding, peer comparison, technical indicators, and corporate actions. So, we just saw 25 companies that have been doing well. Curiously, are there any companies too that have done poorly in all the quarters? That is, their revenue growth, profit growth, and margin change all have been negative for the last 4 quarters. Well, we didn't expect any such cases, but were surprised to find 3 names. The oil marketing giant Indian Oil Corporation is the major name in this list. So, these were the key trends from the recently concluded quarter 3 result season. Overall, there are growth concerns at the market level, especially for small caps. This implies that market returns over the next few months could remain muted. But that doesn't mean that you will have to contend with mediocre performance in your stock portfolio. As an investor, you would want to place your bets on sectors and stocks that have been doing well. We discussed them in this video too, but do your own due diligence and research. And that's all I had for you today. If you found this video useful, Please don't forget to share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.